Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is John Roche. He is CEO of R3ETFs. John, great to see you. Thanks for joining me.
Thank you, Judy. Thanks for having me. It's very nice to be here.
Pleasure. Okay, so John, tell me, with today's market volatility, how can investors best manage the risk?
So we think about this a lot at R3. One of the things we think about is that volatility is good, right? So that might be kind of against the grain, but we think it shakes out the winners from the losers, and it allows investors to kind of look for companies with good free cash flow and to kind of avoid some of the bets that they were mistaking for investments. Things that are very highly dependent upon the capital markets are probably going to suffer as we go through inflation and rising rates. And so volatility can give you a chance to upgrade your portfolio, because you can look at things that maybe you've made a lot of money in the past and you might want to get into a company that provides you more of an income stream, and that's really what we think of at R3.
Okay. Now tell me, what are you hearing from institutions, advisors, retail right now?
So we speak to a lot of advisors almost every day. There's really kind of one common theme, and that's that the retail market has somewhat seized up. So a lot of investors are kind of unsure what to do, because they've been kind of, I don't want to call it trained, but the last 12 years since 2008 has kind of given them a lot of confidence to invest in anything, and that high correlation has given them the opportunity to do anything they wanted to do. I think that there are firms out there who are still rather bullish. So Oppenheimer, who's one of our partners, I think John Stolfa still has a 5,200 mark on the S&P for the end of the year, which might be a little optimistic, but if that's true, that's a big bounce from the bottom here. I think you just have to be in the right companies. Another partner of ours, Bart Bonga, who's the president of Rothschild, spoke to him yesterday after I agreed to this interview, and Bart said, well, I love the volatility because I get my best investment opportunities during that. So his theme is he likes to buy good companies at great prices, or great companies at good prices, and volatility gives that to him.
Okay. All right, and finally, tell me, how are you thinking about the potential impact of inflation?
So inflation, we don't think is fully soaked into the economy yet. I think we're feeling it in the commodity markets, whether it be gasoline, energy, whether it be food, but I think the Walmart earnings and the Target earnings probably gave you an idea that a lot of the retailers have sheltered people from the price increases in order to retain market share. That's going to have to change at some point. So I think inflation is not only here for a little bit longer term than most people expect, but I think it's going to have a worse effect on people's pocketbook than they're already experiencing. So there's been a lot of talk in the last few months about different strategies to combat inflation, whether it be option strategies or crypto is going to be the solution to it. If you look back, 50, 60 years, there have been different bouts of inflation. Most managers haven't been around for that, right? The last real true inflation was probably in the early 80s, but the one kind of overriding theme that has worked during these is buying stocks that grow the dividend over time. Equities outperform fixed income over time, and stocks that have a tangible income provide clients the comfort to stay invested when the market does get rough. And our ETF, Global Dividend Value, or Global Dividend Growth, that's really what we try to do. We try to find those 50 companies worldwide who are leaders, who have wide moats, who really target not only the willingness and ability to grow the dividend over time, but also the capital gains that follow it.